Hey guys, welcome back to another episode. In this video, we're going to show you how to trade supply and demand like the banks. Not knowing this will put you at a huge disadvantage, as you'll forever be on the wrong side of trades, as you'll be trading against big money institutions and against smart money. Here's exactly what we'll be covering in this video. Now, if you want to know the exact key trading tools we use, meaning what programs, apps, plugins, and brokers we use, go to tools.wisetrade.com. The link is also available in the description below. As always, please hit the like button on this video, as it allows for our team to keep producing more free content for you. So let's dive right into it. What are supply and demand zones? Now, this zone below, where price reverses upwards from, is known as a demand zone. Notice how many times price reacts to this demand zone, which shows how important they are to identify. The reason we call it a zone is because you should treat it as a general area where price has reversed from previously. Demand zones are areas where the big boys and large banks and institutions are deeming the asset as cheap and as a value buy to them, so they will often buy up and accumulate a ton of assets at these demand zones. This also means there is a double action that occurs at demand zones. You have big money buyers consistently deciding to open new long positions and big money sellers consistently deciding to close their short positions. This double action is what creates explosive upwards momentum from these demand zones. So, knowing that these zones are where the big boys and smart money are watching and looking to take action, you want to follow what the big money and smart money is doing and enter long where they are entering long to ride their momentum for explosive gains. Now, this zone above, where price reverses downwards off of, is known as a supply zone. Notice how many times price reacts to the supply zone, which shows how important they are to identify. Supply zones are areas where the big boys and large banks and institutions are deeming the asset as expensive and as a price premium, so they will often offload and distribute their assets at these supply zones. This also means there is a double action that occurs at supply zones. You have big money buyers consistently deciding to close long positions and big money sellers consistently deciding to open new short positions. This double action is what creates explosive downwards momentum from these supply zones. So, knowing that these zones are where the big boys and smart money are watching and looking to take action, you want to follow what the big money and smart money is doing and enter short where they are entering short to ride their momentum for explosive gains. So let's show this again. This is the Snapchat stock. This zone here has acted as demand here and supply here. Notice how many times prices reacted to the zone. This zone here is a demand zone. Again, notice all the reactions to this zone on many separate occasions. And down here, a swing low demand zone with these two reversal points. This is the target stock. Along the top is your supply zone. Notice all the times price has reacted to this zone. Along the bottom is the demand zone. Again, notice all the times price has reacted to this zone. This is the Intel stock. Along the top is your supply zone. Notice all the times prices reacted to this zone. Along the bottom is the demand zone. Again, notice all the times prices reacted to this zone. So a question you probably have: what's the difference between supply and demand versus support and resistance? Supply and demand is the market psychology and driving market force behind what creates support and resistance levels. If you go back and watch all our past videos, there is a reason we state to treat support and resistance as general areas and not as a solid line or solid number, because of the supply and demand concept that anchors support and resistance. So one more example. This is the MasterCard stock. This supply zone here is a standard zone. This demand zone here is a standard zone. This supply zone up here is known as a swing high supply zone, which represents a very expensive area and is one the big boys are watching closely. This demand zone down here is known as a swing low demand zone, which represents a very cheap area and is one that the big boys are watching closely. So why are supply and demand zones important to understand? You as a trader cannot move the market. You are simply looking for clues to tell you what the big guys, big banks, and large institutions are doing and trying to follow their moves to ride their wave. The big guys and smart money aren't just going to move money around at any random area or get in and out of positions at low quality pricing areas. They want to get in at the best price and get out at the best price to maximize gains and limit risk. And they will manipulate the market to achieve these goals. Let me rephrase that. They have the power and money and leverage to manipulate the market to achieve these goals. Now, this is the most important part. You follow the big guys and follow smart money to achieve two key things. 1. True market direction, which is knowing the correct direction the market is going next. And 2. Directional momentum. You want to be trading with moving momentum, because if you enter into a trade without directional momentum, your trade will often move sideways and you'll either break even or make very little from the trade. Now, one bonus smart money concept no one will tell you about. You'll often notice big news about companies or assets being suspiciously released or unearthed exactly when price is at very key supply or demand zones. This is not on accident, and there is a reason why it occurs over and over again. On the left is the block stock monthly time frame, and on the right is the block stock weekly time frame. The block stock is at a very key monthly supply zone, meaning price is deemed expensive by the market. This area here, where price is at, is this same area here on the weekly time frame. So then what happens next? Hindenburg goes on to release their negative damning report about the shady dealings of block, and the stock tanks downwards, netting short sellers an easy profit. Here's the takeaway. The big boys will leverage price being expensive and at supply zones, and then intentionally time the release of bad news as an additional confluence factor to more easily sway the stock or asset bearish. In the case of block, big buyers who were in long profitable positions know that price is at a premium at this supply zone, so they're already more willing to unload those positions, especially combined with negative news. Now, this also applies in the opposite direction. When an asset is cheap and at a demand zone, the big boys will intentionally time the release of positive news as an additional confluence factor to more easily sway the stock or asset bullish. Maybe we'll reveal more smart money secrets in future videos, but we do cover this all in depth with our members on our site at wisetrade.com. So moving on to the next topic. Accumulation and distribution. Now, before we continue, make sure to hit the like button on this video, as it allows our team to continue to produce more videos for you. At areas of supply and demand, you won't always have price reverse drastically once it reaches there. You'll often have price chop sideways first before taking off. This is the result of the concept of accumulation and distribution. So, starting with the concept of accumulation. When price is at a key demand zone, the big guys cannot load up and buy everything they want all at once, because it takes time to accumulate such large positions. Also, if they enter too much all at once, then the market would catch wind and price would take off upwards right away, and they wouldn't be able to fill all their orders, meaning less profit, since their position will be a lot smaller, as they haven't acquired everything they wanted yet. So what they do is, they gradually load up and spread out their buys at these demand zones, creating the sideways price movement and consolidation you see forming at these demand zones, and is known as the process of accumulation. Notice how this accumulation process also forms a falling wedge pattern. Once the big boys have completed all their buys, the market explodes upwards. Now, moving on to the concept of distribution. When price is at a key supply zone, the big guys cannot offload their entire position all at once due to the sheer size of it all. They need to offload gradually and in chunks. This again causes sideways price movement and consolidation to form, and it's a reflection of the process of distribution. Notice how this distribution process also forms an ascending triangle pattern. Once all their selling is done and all new short positions are complete, a massive reversal occurs. Now, a key concept. You'll often see different types of patterns naturally forming at supply and demand areas because they are a reflection of the process of accumulation and distribution occurring in real time. Now, moving on to the concept of reaccumulation and redistribution. Now, before we continue, we've had a lot of requests asking us to use a white background over a black background. So do you want us to switch over to a white background or stick with the black background? Let us know in the comments below right now, and we'll tally all the comments to make a decision. Also, make sure to hit the like button on this video, as it allows our team to continue to produce more videos for you. At this swing low demand area, the big boys loaded up heavy here, which resulted in price taking off upwards. and breaking through the next supply level. The directional bias is clearly long and upwards, so you want to trade with this upwards momentum. Price then pulls back to the supply turned to demand zone. Notice how price chops sideways, consolidated, and forms both a channel pattern and a descending triangle pattern. This all shows the process of re-accumulation, which is when the big boys continue to add to their winning long position for even larger profits. Again, the big boys aren't just going to add to their winning positions at any random place. They still look for these demand areas and areas of value within a moving trend. Once price breaks above the patterns and forms a higher high, this signals the big guys have completed their buying and the next leg of the moving uptrend will continue. They will often target this next supply area for a big exit with massive gains. Now, moving on to the concept of redistribution. This is the Goldman Sachs stock. On the left is the 4-hour time frame, and on the right is the 1-hour time frame. These reversal points here make this a key supply zone. As price came back up, notice price chopping around the supply zone, consolidating and forming a descending triangle pattern, which shows the process of distribution and the big boys unloading their long positions that they took on at this demand zone here previously. Once the pattern breaks below, the trend change is confirmed, and you had a great pullback short trade setup here at the bottom of the broken pattern at the demand turned to new supply zone and where the trend line crossed, making it an area of confluence and was a high quality short trade setup. Now, this is very important to point out. The big boys unloaded their long positions and opened massive short positions up here, whereas you got in down here because you are riding their wave, meaning you will often get in later than the big boys, as it is more secure this way. So your first profit target would be this next demand zone here. Now, there was a second short continuation trade setup here at this fresh demand turned to new supply zone. Once price was approaching the zone, you were looking inside of this area on the lower 1-hour time frame on the right for trend change price action. You had consolidation and a trend change pattern through the lower high and break of the neckline and lower low. This represents the process of redistribution occurring as you are in a current moving downtrend, and the big boys are continuing to add big block orders to their already large short positions for even bigger profits. Once they have finished loading up at this area of value within the moving downtrend, price tanks downwards and breaks right through the demand zone. Now, this is a very important point. The reason price broke right through the demand zone so easily is because the demand zone is no longer valid, as all the buy orders and small profit-taking short positions were already filled and completed during this previous touch here. So there are most likely little to no orders at this demand zone this time around. Hence why price blows right through it with heavy momentum and netting everyone massive gains. Now, a very important concept to understand. There is a reason we always say that price action is a reflection of what is occurring in the market in real time, because even though the banking crisis definitely helped further fuel this drastic move down on a banking stock like Goldman Sachs, price action already showed you what was occurring weeks before the banking crisis actually happened. To be more specific, price action is a reflection of what the big guys are doing behind the scenes. And don't be fooled. They all knew what was coming way before the crash actually happened, and they started moving their money accordingly, which is reflected in the trend change bearish price action you saw occurring on the Goldman stock weeks before the actual banking crisis occurred. Now, moving on to the next topic. Weekly and monthly supply and demand zones. Supply and demand zones found on the weekly and monthly time frame hold more weight and are of higher quality. Higher quality means there is a higher percentage chance of price reacting and reversing off these levels, but not just a slight bounce, but a true reversal that will move a greater distance, meaning more profit. This is the IBM stock weekly time frame. This swing high supply zone at the top here was valid all the way back in 2018. It was still valid in 2019, still valid in 2020, still valid in 2021, still valid in 2022, and still valid in 2023. This shows how key these higher time frame supply and demand zones are. This next supply zone formed in 2019. And look at how many times it was still valid years and years after, even as recently as 2022. This demand zone here formed in 2019. And again, look at how many times it was still valid years and years after, even as recently as 2023. Then you have your remaining demand zones. Weekly and monthly supply and demand zones are where the big guys are looking to take on or offload massive positions. Slow-moving institutions aren't going to do these massive movements of money off of minor, lower timeframe levels. Now, you don't sit there and trade these higher timeframe levels during your day-to-day trading process, but you should have these zones marked and labeled so that when you happen to be approaching these key weekly and monthly zones, you should be ready, as these are huge money-making trades. So let's show this again. On the left is the Bitcoin monthly, and on the right is the Bitcoin weekly. Price came down right to this monthly, supply turned to new demand zone, tapped it and reversed. Even when looking inside of where price touched, but on the weekly time frame, you had a wide divergence right at the monthly demand zone, which signaled momentum loss and a possible reversal. You also have the falling wedge pattern and accumulation occurring, and once the pattern broke above, this triggered the move upwards. This is the Alibaba stock. On the left is the monthly time frame, and on the right is the weekly time frame. This point here is the all-time low pricing, which creates a very high quality demand zone. As price came all the way down to this zone, notice how it tapped it and reversed, producing great long trades. You then had this monthly supply zone here due to these multiple monthly reversal points, making it a great exit point. You had a perfect shrinking candlestick pattern followed by a candle color change right at the monthly and weekly supply zone for a great exit. Now moving on to the next topic. False breakouts at supply and demand zones, and how you can use them to your advantage. Now, before we continue, tell us in the comments below right now what video topics we should cover next. Be very, very specific. Also, don't forget to like this video as it goes a long way in supporting our team. This is the TD Bank stock. On the left is the weekly time frame, and on the right is the daily time frame. These reversal points here give you a key supply zone. As price comes back up, notice how price breaks slightly past the zone. Now, support and resistance breakout traders would have been trapped as they all took long breakout trades, assuming that since price broke through, it will continue on upwards. But now, you, as a supply and demand trader, will know to treat these zones as general areas. Also, this zone is a swing high and key weekly level, meaning there is a higher percentage chance price will reverse, even if it goes slightly past it. So, you can also use these trapped breakout long trades to your advantage, knowing that all their stop losses are somewhere in this area here. And once all those stop losses get hit, combined with the big boys unloading their long positions and opening new short positions, this will trigger a massive swing in the opposite direction. Now, even though you know all of this, you still need a trend change confirmation inside of this area to confirm that this was indeed a false breakout. Don't leave anything to chance. When you look inside of this area, on the lower daily time frame on the right, you had a trendline break and lower low, which confirms the false breakout from the higher time frame and confirms the reversal, and is when you would take short entries through the even lower intraday timeframes. To take it even further, once the second longer term trendline breaks, this signals an even larger move is coming to the downside. So let's show this again. This is Ethereum. Now, to point something out first on the monthly time frame. Notice how price recently came down and tapped this old supply, turned to demand zone, showing how well these zones work even if historical. So let's pull up the Ethereum weekly, daily, and 1 hour to show this trade setup. The top left is the Ether weekly, the top right is the Ether daily, and the bottom is the Ether 1 hour time frame. Remember that this is a monthly demand zone we previously showed you. This demand zone was also recently respected here, close by to the left. As price came back down to this key demand zone, you had consolidation and accumulation occurring, followed by a break of the trend line and higher high, giving you a very clear bullish bias, meaning you want to look for long trades. So you then look inside of this area for a long continuation trade on the daily time frame. These reversal points here give you a demand zone. Now as price pulls back, notice how it breaks slightly past the demand zone. At this point, because you are a multi-time frame trader and you had already analyzed the price action on the higher time frames, you would know that the true market direction is long and upwards. What this means is this might be a false breakout if there is an intraday trend change. So when you look inside of this false breakout area, but on the 1 hour time frame, you had an ascending triangle pattern. And once it broke above with a higher high, this signals a trend change from a downtrend to an uptrend and confirms the false breakout from the daily time frame. You would then go to the even lower timeframes to look for a long entry point using our entry and exit strategy and key tool. So moving on. trade exits, and trade management. So, you entered this short trade setup here at the supply zone, and you target this next demand zone here. Price gets there, and your position automatically closes for a profit. Great. You then enter a long trade setup here at the demand zone, and you target the next supply zone again. Price gets there, and your position automatically closes for a profit. Another profitable trade. But now, this is what occurs in the best case scenario, but as a trader, you should know that it doesn't always play out as picture perfect as this. Alternatively, these scenarios can occur instead after you enter. Scenario number 1. You enter on this long trade setup here and are targeting this next supply zone here. But before price gets there, it reverses all the way back down and you would end up with a loss. Without knowing how to manage a position correctly, you would have taken a loss on this trade instead of knowing where to lock in profits. Scenario number 2. You enter on this long trade setup here and are targeting this next supply zone here. Price starts to pull back and you think it will come all the way back down. So you let your emotions take over and you manually close out the position. Then what happens? Price takes off upwards, hits your target, and even continues on further for a massive profit you missed out on. Again, not knowing how to properly manage a trade means you're at a huge disadvantage and leaving a lot of money on the table. Scenario number 3. You enter on this long trade setup here and price hits your profit target. So you close out the position. But closing it out was premature because price continued on even further for even larger gains. Again, you need to know what to do to lock in gains, but also still be able to take advantage if price continues on. In all of these scenarios, where do you initially place your stop loss? Where do you move your stop loss if there is a trend change before price reaches your target? To not only protect your position and lock in gains, but also to not have it hit by accident in case price swings before continuing on. How do you know how to correctly manage your position to maximize gains, to not miss those big profitable trades, but also protect yourself from losses? We answer all these questions in depth on our site at wisetrade.com. Everything we've covered in this video is only the foundational concepts, but we go in depth into a lot of advanced strategies and methods only available on our site at wisetrade.com. So go check that out now, as we have some limited time special things available for you. As always, please hit the like button, subscribe, but most importantly, turn on the notifications bell to stay notified about a lot of exciting projects we have dropping soon. And last thing, make sure to go subscribe to our Instagram account at wisetrade. So thanks for watching, and I'll see you in the next episode.